Hello, I'm Bob Pickel, Chair of the Management Board of Prime Finance, and welcome to another edition of PRIMEtime 2.0. PRIMEtime 2.0 is Prime Finance's series of conversations with people in the world of international finance and law. It follows on from the original PRIMEtime, which was a series of hour-long presentations during the pandemic about a range of topics. And like the original PRIMEtime sessions, PRIMEtime 2.0 conversations are available on our website, www.primefinancedisputes.org, and on our YouTube channel. I'm delighted to be joined today by Keith Noyes, who is a good friend and a former colleague. We've worked closely together when we were both at ISDA back 10 years ago plus. So he was with us for about 12 years, I think it was, including more than half of that under my tenure as CEO. Keith was the regional director for Asia Pacific based out in Hong Kong, but he was more often than not on the road, anywhere from New Zealand or Australia up to Japan, over to India, and maybe even the Philippines you made it over to at some point, Keith. So you covered a lot of ground while you were out there. And of course, Keith, we could spend the whole time today talking about our time at ISDA, things we accomplished, how the markets had developed in those regions over your tenure with ISDA. But I really wanted to take some time today to focus on your current focus, which is the crypto area. And you've had a few different roles in the area of crypto, and most recently serving as Chief Risk and Compliance Officer for Scrypt Digital Trading AG, which is a leading financial services provider specializing in crypto assets for Web3 companies and institutions. So it's all going to be something crypto today over the course of our conversation, and I'm looking forward to our conversation. So Keith, what interested you about crypto? In our time at ISDA, I don't remember talking to you about crypto. I mean, obviously Bitcoin existed at the time we were working together, but it wasn't something you were talking about prominently. So what got you interested in crypto?
It's a very interesting question. I had one of these life-changing encounters, coincidentally, very shortly after I left ISDA in May 2019. I went to an Ivy League ball in Hong Kong and ended up sitting next to someone who was starting up a crypto company. And our discussions then led to various aspects of the riskiness of crypto. And out of that, he said, actually, would you be willing to write a paper for me analyzing how one would possibly risk manage OTC derivatives on crypto? And so, since I had lots of free time at the time, I got stuck into it and did this project. And that opened my eyes to the fact that in some ways crypto could be treated just like any other financial product, and the framework that we had used at ISDA in terms of risk management had a lot of applicability, but that there were also unique things about crypto that required some nuances. For instance, the market trades 24/7. The settlement cycles for different coins are very different. Uh, Very importantly, the ethos of the people involved at the time was very anti-government and anti-regulation, which very much similar to, I think, when you started out in the ISDA world. That meant that there were all kinds of bad, patchy documentation out there, none of which allowed for any fungibility in that sense. So that got me very interested then, because I think, as you know, it's always fun to be in a frontier market. There's a lot of chance to make a difference. And it's also be very fun to be part of the process of bringing conformity and uniformity to it so that you can make things safer. But once you reach the so-called end state where you have safe, efficient markets, it becomes very cookie cutter. So it was very nice to go back to my early days in derivatives again, in a sense, and work with new products and have a chance to have more of an impact, I think, than after all the regulatory dust has settled.
So how you mentioned cookie cutter, that's interesting. Are we at that point with crypto? I mean, certainly the fact that uh, coins are being cranked out, on a daily or hourly basis, it seems, from various sources and various people. Um, are we at a cookie cutter state, or is it always going to be still evolving?
I think it's very much still evolving. I think the parallel for the ICOs that you talk about is new stocks, and again, that's a difference between equity and fixed income, where equity has always had a degree of idiosyncrasy to it that fixed income doesn't. Uh,
Mhm.
but I think more importantly on the why I would say it's not a cookie cutter stage is um, you still have very different pools of liquidity all over the world right now, and
Mhm.
I think that probably will lead to some consolidation in the near future, and then you will maybe start to look a little bit more like traditional finance. Certainly, we have seen now the master agreements that these different organizations and venues are putting out are
Mhm.
you can see that they've started to hire more prominent law firms because they're starting to look more similar than
Mhm.
they used to. But I think that's still very early stages of heading towards that conformity in terms of the documentation.
Mhm. Mhm. So before you came to ISDA, you were very involved in the business and trading world with Merrill Lynch, and then also
Yeah.
in Taiwan as well. Of course, I should note that you're a fluent speaker of Mandarin, which was a great asset to us at ISDA since China is so prominent, and we did a lot of work there in China. You did a lot of work there in China to,
Yes.
to get us to where it is. But and then, of course, it is that you focus more on policy issues, meeting with regulators in all those countries I mentioned and many more. So, how did your experience in the business world and in the policy world prepare you, or maybe not prepare you, for moving into the crypto world?
Again, very good question. I think the policy side with ISDA um, was very much regulatory focused, and that allowed me to move relatively seamlessly into one of my two functions, which is on the compliance side. Um, and that, I mean, I think the big thing in crypto is anti-money laundering
Mhm.
right now. And the big difference between crypto and traditional finance is a lot of it because it's on blockchain. The blockchain forensics and provenance of coins is a very different aspect than what you see in traditional finance. And I would argue actually a more powerful tool for fighting money laundering than exists with fiat currencies. And so that's actually been a revelation. There's a tremendous amount of bad press around Silk Road, and certainly there's a colorful back history, but everything is traceable. I mean, every token that has ever gone through Silk Road um, will have an alert attached to it that I see on. Then there are various blockchain forensics providers. You quickly choose one and have to become expert in it, and the sleuthing on that to track provenance of coins and whether your counterparty has knowingly or unknowingly been associated with a terrorism financing wallet or a sanctioned entity is really quite fun and interesting.
Mhm.
On the risk side, the background in derivatives trading has really stood me well. I have been through enough cycles in the market to be a lot more skeptical than some of the younger people in the crypto market because I've seen market downturns. I've seen what happens when rates are up, and I do think that much of the crypto world was very surprised after 2021 with the market downturn in 2022 and the prominent bankruptcies of several institutions, and then going into a crypto winter because with rates up, alternative asset classes um, were more attractive and people were de-risking.
Now, you mentioned crypto winter. That was quite a phrase going back a year or two. Uh, but are we in a spring, a summer? What's the future for crypto? Is it bright or gloomy?
So I think it's bright. I mean, it might surprise you a little bit, but while there are all these ICOs out there, um, I think a lot of cases they've yet to generate real use cases. So a lot of it is speculative, whether it's a meme coin for a new president and his wife, or someone promoting a new layer one technology. The use cases and whether those are real revenue generating um, ideas is not proven yet. So I think most of that ICO business is speculative, but I think there's a real argument to be made that people are trading Bitcoin as digital gold now, as a
Hmm.
store of wealth, and I think also um, the stablecoin business and central bank digital coins, which has been a bit slower to develop than I predicted, and I think that's due to central banks being cautious and having a lot of stakeholders to consult. But that is proving to be disruptive right now.
Yeah.
Those banking fees, credit card fees, um, slow to deliver um, currency things with fiat, where you might make an FX transaction, then transfer money to your account in another country, or to pay someone for a bill, and you wait 3 days for good funds. The stablecoin business is disrupting that. One thing we see very specifically in South America, for various good reasons, many South Americans don't have confidence in their governments and central banks to maintain the integrity of their currencies. And to the extent that FX laws allow, they like to convert their money into US dollars or euro or Great British pounds, and convert those into stable coins for holding or for futures spending. So that demand is going to be there as long as consumers don't trust their central banks not to be profligate with their currencies.
But a lot of central banks are looking at the potential for digital currencies. You point out that they're quite cautious in terms of taking the plunge. But I mean, do you think we'll see a large number of central bank digital currencies, or will there be, a few large dominant ones in that space?
So, just as you have with the current FX market, your dollar, euro, the bigger currencies would be expected to dominate when central banks come out with coins. I mean, I think there are big concerns around central bank digital coins from the consumer aspect has been the privacy aspect. I mean, you really don't want a central bank being able to say, we're going to give you this tax refund, but you're only going to be able to spend it at supermarket X, Y, or Z, and we can control that such that you're limited to these choices. I think that level of big brother scares people, particularly, as I mentioned, there's this anti-government ethos and anti-authority ethos in the native crypto people. Anyway, but assuming that some of these issues are worked out, I do believe that at some point in the future, I will not put a number on it, we are going to see that the main price discovery in FX markets is between central bank digital coins.
Interesting. You are, I should have noted, a member of our FinTech Forum, which is a collection of our experts who focus on FinTech issues. And that's headed by Daryl Duffy from Stanford University, various people on the forum, in addition to you, including Tim Massad, former chairman of the CFTC.
Yeah, I just have to thank Tim and Daryl. They send me more reading material that I can possibly consume every week. They're absolutely fantastic.
Well, that's great. That's good. Good to know. We focus a lot on crypto and its various guises, particularly CBDCs, the central bank digital currencies. I guess as in some ways, as much as crypto is still in the discussion, so much in the tech world has moved on to the discussion of artificial intelligence and where that goes and what that means. And it certainly seems to me that, while they're both technology, crypto and crypto slash blockchain and artificial intelligence, I got to figure there are some potential synergies or connections, or even if they're quite different, there'll be ways in which we might see those two technology worlds touching in some way. Again, looking into your crystal ball, any sense as to whether there's any logic behind that connection?
Sure, I'll make a couple comments on that. So one, it probably wouldn't surprise you if I told you that the adoption of ChatGPT among my work colleagues is nearly 100%. They've very quickly embraced the technology. It's wonderful for putting together drafts of presentations and things. I always have to caution them that what ChatGPT comes out with might not be the nuance or correct answer. One colleague once said, we were looking at where in Europe we should set up a MiCA compliant jurisdiction, and the answer that ChatGPT came up with made sense on several parameters, except for the fact that it's a jurisdiction with a horrible reputation, and setting up there would mean that the blue chip business that we hope to do would probably, those counterparties wouldn't want to deal with us. And so it was a light bulb moment when I said, yeah, all these arguments make sense, except that ChatGPT has not been able to consider this aspect of reputational risk and what that would mean for the business direction we want to go. So that's one thing. The other thing I would say is, I think one of the concerns with AI is the deep fakes. And one area where I think there is a possible convergence is, with NFTs, if you're familiar with that, the NFTs of the grinning ape, et cetera, you can prove authenticity. So there is the ability to embed a digital stamp in data such that the source you could be showed is immutely not has not been tampered with. And I think as the deep fake problem becomes greater, I would not surprise me if technology applications evolve to stamp every single piece of data with an NFT like instrument,
Hmm.
such that people could say, okay, this is the real Pub Pickle talking to me, and not some AI creation trying to
Yeah.
hoodwink me into investing in pork bellies.
Yeah. So you mentioned the quote unquote real Bob Pickel. In our annual report, which is out now, I had my introduction letter, and I've kind of avoided the write something, use Chat GPT to write something, but I said, well, why don't I see what it comes up with as an opening introduction letter? So I just fed in some stuff, and it spit out a response. And as I say in my note in the annual report, it wasn't bad, but it wasn't. It was it was impersonal, uh, and so then I moved into a more personal opening letter, which is something I actually wrote. But it's interesting how close it came up with a good standard, really a starting point. I went off in some different directions, but
Yeah,
to do.
I have to admit that the Chat GPT has written much better Tang Dynasty Chinese poetry than I'm able to write.
Okay. Well, maybe that's something you don't need to focus on now. So, um, well, Keith, those are the things I wanted to cover in our conversation. I appreciate you taking the time to join me on PRIMEtime 2.0. And as I mentioned, this conversation is available on our website, www.primefinancedisputes.org, and on our YouTube channel. And once again, thank you so much for joining us.
With absolute pleasure.